Let me ask you this. How many times have you been right about your trade idea, but still lost money? It is not your strategy that failed. It is your risk management. In this video, I will show you one simple trick that top traders quietly use to protect their accounts and stay profitable, even when they lose trades. So stay tuned. Immediately after our intro, we'll dive straight to the main point. Welcome back to AFTechTrades, where we simplify trading strategies and mindset so you can grow consistently. If you are new here, hit that subscribe button and let's make trading simple again. Here is the truth. Every trader loses. Even professionals lose up to 40% or more of their trades. The difference between a losing trade and a winning one isn't the win rates. It is how they manage risks. Think of risk management as your insurance in trading. You can't control what the market does, but you can control how much you lose when you are wrong. Here is the trick that almost no one talks about. Dynamic position sizing. Instead of risking the same lot size or dollar amount every trade, adjust your position based on the setup strength and stop loss distance. Okay? So you need to adjust your setup based on the setup strength and the stop loss distance. Right? For example, let's say you have a tight stop loss of 20 pips. Let's say you have a tight stop loss of 20 pips. Right? 20 pips. Let's say you have a stop loss of just 20 pips. Right? You can risk slightly more. Just slight. Then if your stop loss is wide, let's say like 50 pips, you reduce the lot size. I hope you get. If your stop loss is like 50 pips, right? Then you reduce the lot size you'll be using. You reduce the lot size you'll be using. If you see that, okay, this setup is giving you 50 pips lot stop loss, right? You now reduce your lot size. Let's say you're using one standard lot size per trade, for example, and you're risking just $20 in a trade. So now you saw a setup that fits that align with your trading strategy, and on this setup, it's showing you that it will give you 50 pips loss. So what you do is that you will now change your lot size from that one standard lot size you're using. Let's say you change it to 0.5, for example, right? Let's say you change it to 0.5, for example, to reduce your risk. In this case, to make you reduce your risk. This keeps your risk per trade consistent. You understand? No matter how the chart looks like, you are not gambling with random sizes. You are controlling risks like a pro. So this will manage your risks. This will make you manage your risks properly. I hope you get this. On this rule, you should keep your total risk per trade below 2% of your account. Just 2% of your account. Don't go beyond that on this rule. Yes, we call this the 2% rule. Let's say, for example, you have a $1,000 account. For example, let's say you have a $1,000 account. Pardon my writing. Sorry. Okay, let's say you have a $1,000 account, right? And that means you shouldn't lose more than $20. The 2% of 1,000 is what? Is $20, right? 2% of 1,000 is $20. I hope you get. So on that account, try as much as you can. You shouldn't lose more than $20 on any trade. Meaning if a stop loss is above $20, then you reduce your lot size. You reduce your lot size. Just make sure that you don't pass. You can be below $20, but don't exceed $20 per trade. Just once you follow this rule, believe me, you start seeing positive results. You don't rush the market. That's just one thing about trading. You don't rush the market. You don't want to make quick profits. Once you say, let me quickly increase my lot size, make quick profit, you blow the account. That's one funny thing about trading. So it might sound, this $20 might sound small, but this is what allows account to survive losing streak. Even after 10 loses in a row, for example, you will still have over $800 left. That's what consistencies look like. You get, so you lose $20. Let's say you lose like 10 good trades in a row. You still have $800 left. You see? You still have $800 left. Please use this calculation both on small accounts that is not up to $1,000. You're just using $1,000 for example. You can use this calculation even on $100, $50. You get the point, right? So just be consistent. That okay, before you enter any trade, you have a setup. If this trade will make you lose more than $20, then avoid the trade or reduce your lot size to align with your trading rule. I hope you get. Reduce that lot size to align with your trading rule. So once you reduce the lot size, if the there is what we call limit order. You can see all this, and you can go to there's a way you can calculate the lot size calculator online. You go online. I did a video on that. You can also check this channel if you don't know how to do all these calculations, right? It's very, very important. It's part of risk management, right? So now let's move on to the next step on how to manage your risks properly and how to stay long in the game. I know you'll be wondering why I didn't show charts, and you're wondering why this video is not a normal regular video where you see charts and this is a strategy you enjoy. This is one of the best strategy you can ever get for free on the internet. This is one of the best strategy people pay money to get on the internet, and you're getting it for free here. I hope you get. Without this, there's no how you can be profitable in trading. That's just the fact. Once you master this, watch this video carefully, ask questions if you don't understand, jot down, get your jotter, write down things, bring things together, put it, journal it. You get, journal it and follow these rules strictly. You will start seeing positivity. You start seeing progress in your trading. You get, no matter what strategy you have, for example, and you don't have this risk management in trading, you will definitely just lose. You will get tired, and you think the market is not for everyone. The truth is that trading is easy if you follow the rule. Remove emotions. Remove emotions. So now, if you are yet to subscribe to this channel, hit that subscribe button, because here we drop trading signals on our Telegram channel free of charge, and we also give you insight of what the market is going to be like on some top currency pairs. And on this channel here on YouTube, we drop educational content that are very valuable for you, free of charge. All you need to do is just to hit that subscribe button, so, and also turn on the bell notification, just in case we drop any video, you'll be the first to be notified. So now let's move on. Talking about the risk reward ratio. Now combine that with a 2-to-1 or 3-to-1 reward to risk ratio, for example, and the math becomes unstoppable. Let's say, for example, you risk $20, right? Let's say you risk $20. I just hope you are getting this, because this needs you, even a primary, even a 5-year-old can understand this. So now let's say you risk $20, right? And you make $60. And you make $60 when your trade goes your way, right? Even if you win only 4 out of 10 trades, you will still come out profitable. If you do the math, you get, if you calculate that, okay, in a 10 trade, I took 10 trade, for example, for the whole week or for the whole month or for the whole day, even though I won't advise you to take 10 trades for the whole day, but let's assume you take 10 trades, you get, multiply $60, you get, and let's say you win just 4 inside that 10 trade, you win just 4, but like $60, 60 times 4, what will you get? 60 times 4, what would be your scores? Multiply it and see. You got $240, right? $240 is what you make here. Remember, you're risking just $20, right? You're risking just $20 per trade, and you took 10 trades. So now it means you lose 6 trades and you won 4 trades, right? Which gave you $240. I hope you understand. So this $20 times 6, times 6 trades you lose. What would be your calculation? That is $120. So you see that you are still in profits. Just imagine losing a whole 6 trade and just winning just 4 trades. You are still in profits. And what will be your profits if you are to subtract it from that 240, right? You are still with a profit of $120. This is how this strategy works. Look how simple it is. So that is how rate traders grow. Not by winning more, but by losing smarter. You need to be very smart in this game. You're not winning more, but you lose smarter. So not because you are winning, you will increase your loss size. No, stick to your rule. I must not lose, let's say, $20 in a 1,000 account per trade. Stick that. Depending on your account size, use that to calculate how much you don't want to lose per trade. I hope you understand this simple rule. Now, this is a bonus tip I want to give to you all, right? So this is a bonus tip and it's more like a pro tip also. Normally, you should always set a daily loss limit. Let's say, for example, 3% of your accounts should be your daily loss limit. 3% of your accounts. So don't lose more than 3% of your accounts. You get the point? So I hope you understand. You can do the maths. You can understand that, okay, if I have a 1,000 account, I shouldn't lose more than 3% of that 1,000 account. Just have that rule that, okay, once I hit 3% loss for that day, then I'm closing. I must not win. Not every day is a winning trade, is a winning day. I hope you get. So once I lose 3% of my accounts, then I am off trading for that day. I'll take a break and rest. Take a break. Don't force the market. Take a break, rest. Log out of the charts, and tomorrow is another day. The market is always there. That's also, if you don't understand, the market is always there. You might blow your account and you won't be there, but the market is there. So why the rush? Why the rush? No revenge trading. Don't say I must win today. Not every day is a winning day, is a winning trade. So if you hit that, stop trading for the day. This simple rule protects you from emotional revenge trade and helps you stay consistent long time. I hope you get this. So all these rules I give to you on risk management, if you can follow these rules strictly, then you come back to this video and say thank you. You will definitely come back to this video and say thank you. I have tried this rule for, let's say, I was disciplined for complete 1 month using just this rule, and this is the outcome of it. I would love you to come back to this video. So now let's recap. Here's the best risk management trick in one line. Control how much you lose before worrying about how much you make. Adjust your position size, stick to the 2% rule, and use a daily loss limit. Do this and you will notice your account lasts longer and your confidence skyrockets. If you find this video valuable, hit that like, subscribe, and turn on the bell icon for more smart, simple trading lessons right here on AFTechTrades. Until next time, trade safe and trade smart. See you. Bye-bye.